let's talk first and foremost about, well, the future as we look at a loss that continues. Do you hope to gain profitability? How do you see, the world evolving in meal kits? And indeed, now you're branching into deliveries now of fully made processed food.
So we see this as a pretty standard impact of seasonality with a little bit of a twist this time. So Q3 in the meal kit industry tends to be the highest cost quarter no matter what, because of the fact that we're very concerned about food safety and it's the summer months. So we tend to use extra packaging, extra ice, et cetera. So Q3 is historically usually our lowest revenue quarter and highest cost quarter, and that's pretty consistent in the industry based on seasonality. What we saw this year was actually a very interesting spike in pent-up travel demand that actually came into the business just from people who were trying to get travel in before school started. Maybe they hadn't been able to travel earlier because of COVID. The interesting aspect about this quarter is we demonstrated what we had intended to, which is we've been really focused the last 2 years on building value per customer. And so our revenue per customer, AOV, and orders per customer remain extremely high in post-pandemic trends, even with the high travel that we actually saw this quarter. So we look at that as a very positive sign ongoing for the business when we think about the ability to drive customer growth on top of that and then push towards profitability. But at this point, with the 78 million that we just raised and closed this past Thursday into the business, we're really going to lean into marketing to scale on top of that and focus on growth for the next year to really drive that customer acquisition number up on top of those key customer metrics that have been so strong.
And you're also changing what you can offer to the customer at the moment. You have still, well, the ingredients being delivered, the menu options, but you now have Heat and Eat, which is sort of your foray into prepared single-serving meals. How is that going, and who are you really targeting in that?
It's really about flexibility. So the thing is, we want to provide very high quality meals to our customers and make sure we're meeting their needs where they are. So the core meal kit is still very successful for us. We have the highest quality ingredients, very high animal welfare standards, and great recipes. Now we've also introduced, you can buy single boxes on our market where you can actually just buy a pre-configured box without a subscription. And then we layered Heat and Eat on recently as well to give people different options to be able to add more food, more meal occasions. With Heat and Eat specifically, what our customers were looking for were the ability to supplement their core meal boxes with prepared meals for lunches or for on the go, when the kids are going to soccer practice or something and you need something really quick, but they wanted the Blue Apron quality. So this is becoming very additive to the business as we expand, and then we continue to introduce new products that'll actually open up new audiences to us as well.
It's interesting that you're talking about, how costly ice can be in the summer and how that is a difficult element. All I can think of is supply chain issues at the moment, the cost of food in particular going up. How is that affecting your business?
We've definitely seen cost pressures when it comes to food, when it comes to logistics, and we try to manage that very carefully. On the food side, what's interesting about Blue Apron is we are a direct supply model. So 70% of what we put in the box comes directly from the producer, and we have great relationships with those suppliers in order to maintain quality at a reasonable price. And so we're very focused on continuing to manage those costs without sacrificing anything about the experience in the box. And we did see a lot of those cost impacts come into Q3, which is expected. We also saw a lot of the logistics costs come into Q3 as well. But what we think we've seen at this point, based on our discussions and negotiations with our suppliers, is that most of that impact is already visible. So in other words, what you're seeing in Q3 as far as impact, again, that's always our highest cost quarter anyway, is really something that we can predict and manage going forward. And we expect margin to actually recover coming into Q4 and then, of course, into 2022.